Now we are coming down, this is perfect because we always talk about structure. We are at a level of structure. Would you deem this to be a major level of structure or a minor level of structure? Given the circumstances. Interesting, a nice little structure swap in here too. Yeah. Right? This is not going to be a major level of structure. Why? We have an underlapping level of structure right underneath it. So when we talk about underlapping or overlapping levels of structure, right? When you have two levels of structure right underneath each other, which is going to be the strongest, right? If we look at the main swing, right? And remember, it's hard to tell from here, but we have from our higher time frame, right? This is our main swing. This is where price action went from a swing low into our swing high. Right now, of course, price just doesn't go up; it ebbs and flows. So you have all of these levels of structure in here as well. But remember, whenever we're dealing with overlapping and underlapping levels of structure, which means that you have another level of structure either right below it or right above it, the one below it is going to be the more important one. So these lows, right, the end of this downward swing and the start of this upward swing, this is going to be the most important level. So we always have, or the more important level, we always have this conversation on how you can handle this. And the question is, well, Keel, does that mean that I can't trade here? What do you guys think? Does this mean that you're not allowed to trade at this level? You can still trade there, sure. Of course, you can do whatever you want, right? It's your trading plan. You can do whatever you want. You just have to be aware. And you have to be aware of a few things. Be aware that, one, the safest play, be aware of the risk, right? Your safest place to put a stop loss is going to be below the lower level of structure. So if you want to take a stop loss that low, you have to be open to taking extra risk. Or if you're not open to taking extra risk and you say, hey, I'm just going to use a regular, let's say ATR stop, and I'm going to put it right here. Can you do that? Yes. You just have to accept that, hey, my stop loss may not be in a great location. Right? How many of you guys saw the weekend trading edge this weekend? Duh. You all better say yes, or I will come to your house right now. I will strap you down to your computer and make you watch it. Right? Remember the little example about the tiger? Is it okay to have a tiger or a lion? I guess it was in the video. Is it okay to have a lion as a pet? Sure. Sure, you can have a lion as a pet. Just don't be upset when it mauls you. Because it's a lion. Eventually, it's going to do that. Don't be upset when it mauls you. So this is the same thing. Can you have a stop loss here? Sure. Can you take a trade at this level? Sure. But if you get burnt, just don't complain about it. Or if you don't like your risk, don't complain about it. So another way to handle this is to be more conservative. So let's say you're an aggressive trader. Let's say you're someone that says, hey, I'm a structure trader. If price action gets down to the structure, then I trade using a higher high, higher close. That's but we'd all agree that's kind of it's not the most aggressive, right? The most aggressive would be a limit order, but that's more on the aggressive side of our entry scale. If you guys are new or maybe you're trial members, we have kind of there's a scale of entries where it's like if we go in order from aggressive, the most aggressive is like just a limit order, just straight limit order. Fearless, stand in front of that train and hope it's going to turn around by the time it gets you. There's a limit order, and then there's like a single candlestick entry where you just need like a pin bar. Then there's like a higher high, higher close, right? That can be the same thing as like a 3-bar reversal. Then there's like a double bottom, right? Then there's like a 2618, and there's, I'm sure you can customize all types of stuff in between here. But if there's 5 kind of levels of entry from aggressive to conservative, right? It kind of looks like this. So let's say your normal entry is a higher high, higher close. That's, kind of right in the middle. Because you deem this as a location that is more risky, how do you want to counterbalance that with your entry? If you have a riskier trading location, do you want to take a riskier entry or a more conservative entry? Which one? And this is my exact philosophy on trading as well. More conservative, right? The riskier the opportunity, you could say I guess I don't know if riskier is the right word, but I always call it the worse the opportunity, right? And that means risk reward too. And when I look into these things, I take risk reward into account. But the riskier the opportunity, the more conservative entry I want to be. The more aggressive, or the better the opportunity, the more aggressive I'm willing to be. I think about it like, so you guys all said you watched the Weekend Trading Edge. I hope you also watched Everton tie Man United. So Everton played Man United this week, and Everton's pretty beat up. We're missing both of our strikers are injured, and we're missing our starting right back who is injured. So we're in pretty bad shape. And Man U is pretty good. They should be better, but they're pretty good. So basically, we knew that this was a risky type of game. So our coach decided to come out conservative. We're going to be conservative. We're going to play good defense, and we're going to try to get them on the counterattack. But the whole game, make no mistake, we were going for the draw. We weren't trying to win. We were going for the draw. Just don't give up a goal. Nice, Ed. Because he played. He didn't start. He played. He knew what it was. He didn't want to put himself out there. He knew who he was facing. Come on now. On the other hand, if we were playing a team from like the championship, and maybe Everton's a bad example because we tend to lose to teams like that, but if we were playing a team that we didn't deem to be kind of better than us, if we were playing a team that we knew we probably should easily beat, we would have had a much more aggressive approach where instead of kind of like, hey, park the bus and hope for either a goalless draw or catch them on the counter, the mindset would have been, hey, let's attack. Let's get this as many goals as we can, and then we'll just, rest our players for an easy win. So it really depends on the circumstance. So in a situation like this, maybe you make that shift, and this is something that can come as you evolve your trading rules. It doesn't have to be there at first, but maybe you make that shift from saying, hey, I'm usually an aggressive, higher close trader, but because we're not at a great level of structure, we have the underlapping level of structure, I default to looking for a double bottom because I need more confirmation. Or maybe I go from a double bottom to a 26-18 because I need more confirmation. Again, whatever fits your fancy, right? But you can make those adjustments if you find a level that isn't the best by being more conservative with your approach. Let me go back up. I know I missed some questions here. Bat pattern. Makil, how would you draw that structure swap as if you were to trade them? I would just take get over here. Take this line right here. Take this level of structure. Just like that. Lowest low, lowest close. Let me know if that makes sense. It's very, very important to understand that, price isn't going to, even with fibs, with structure, right? Things aren't going to always align exactly. So in the ideal world, right, these highs right here would be exactly in line with these lows. But trading is in an ideal world. So everything works in zones. So honestly, right, you can, if you're looking for this entire zone, if you want to take this level of structure into account, right, you can have your level right here if you're drawing. I know you draw from lowest low to lowest close right there. If you want to take this inside level into account, you can draw it from this highest high to highest close. And basically you have two levels like this. You can just combine these two levels if you want and just say, hey, this is my zone. So if you're taking both these levels into account, you could say this is my zone. And then this is kind of the overlap point of it. If you're trying to figure out which one to take, what's going to be the most important zone, or I'll ask you guys this, between these two zones, between this inside level of structure and this level of structure right here, which should be more important? Inside or outside, inside or outside, inside or outside. One's always more important. Oh, sorry. That would help if I scrolled down. Sorry. Outside, yeah. I'm like, why is that? This should be an easy question. How come no one's answering? I'm scrolled up to the questions I missed. Yeah, outside. Well, yeah, the zone overall, but if you had to choose one. Because I feel like you're the type where it's like you can't have, like, I'll just draw the zone. Like, I don't really care, right? This is my zone right here. But I know you're very detailed in your deal, so I know it's like, hey, let me stick to my exact ways of drawing this in like that and that in like that. So I anticipate you saying I have to choose one. So if you had to choose one, you default to the outside level of structure. Honestly, just draw the zone like this. That's what really matters. But that's something that comes with experience. That's something that comes with experience as you shift more from the science of trading to the art of trading. You can just draw those bad boys in. So, all right. So let's But yeah, if you had to choose one, the outside level one is going to be more important than the inside level one. If you had to choose one. So yeah, let's talk about targets now, right? So let's say that we're waiting for a double bottom because we're conservative traders, or maybe you're already in it because you took the higher high, higher close, right? You've got minor structure. 1 point, you've got RSI overbought, right? Nice high momentum move down here. Looking for area of relief, right? You got a CTS 2. Right now, man, it's a low CTS score. CTS 2. We know our entries, whether you're in it or you're waiting for it. We can do stops. Let's just do an ATR stop. I think most of you guys use an ATR type stop, so that's 12. Let's do our subtraction, 70 or 68.77 minus 12, 55. Yep, love easy math. Look at that. 55 is a 1 ATR stop, so 1 ATR stop would be right here. That actually gets you below the level no matter what. That's not a bad stop loss. Look at that. Let's talk about targets. Shoot me in some ideas of targets. I see 69.39. I'm going to draw some lines on here. 69.39 right up there. Why 69.39? I see 69.25, 69.39, 69.25, 69.30, 69.30. Here we go, 69.30 for the guy in the front. Hussein says at the wick. Which wick? There's lots of wicks here. Got to be more specific than that. Matt says 69.20. Ooh, 28. Oh, you're that guy. This is like the Price of Right thing I always told you about. I had a podcast about that. I don't think I ever released it because I don't want to admit to, what's it called? What's it called when you plan a murder in advance? Any of you guys have experience doing that? Predetermined murder. Oh, yeah. We talked about Price is Right, and I think a lot of you guys didn't know that show. And it's this thing where you bet on money, or you guess the price of something, and like premeditated. There we go. We had a whole conversation of like the thing that annoys me. The probably the only thing that would drive me for murder would be being on the Price is Right, and I guess the price, and I'm like, oh, $79, Bob, or whoever's doing it now. And the next person next to me is like, $79.01. And I'm like, you son of a boop. On site. It is, I think it is the worst defense you could do in life. There's some pretty bad things you could do in the world. I don't know if there's much that beats overshooting someone by a penny on the Price is Right. So I had a whole podcast about that, but I didn't want to put it out because if I ever get the chance to be on that show, then there's no type of deniability. I'll be in court and they'll just play the podcast and I'll be like, guilty. Judge, he said right here what he would do if it happened. Got me. Lock me up. Wouldn't even fight it. I'd like to fire my lawyer. I don't need to pay this lawyer. I'd like to represent myself. Guilty. Not too hard. But yeah, premeditated murder. That's, yeah, never want to admit to that. I should probably stop recording this right now as well. Anyway, so we got some levels right here. Now, when you guys drew those levels out, what were you looking at? Were there fibs? Were there structure? Were there wicks? Were there front running? Right? Let's shoot some ideas because again, we're trying to do some lessons here on target taking as far as structure. Matthew says, simply structure. You were 28s, Matt? I think everyone was looking in the same area, which is good. Everyone was kind of looking in this inside level of structure, right? Different parts in that. I think most people were looking at that. Bobby said inside level, also the big Mo candle. What was your thing, Bobby? Premeditated, 69, 18. Bobby's was an interesting one. That's an interesting one right here. That's an interesting one. Not interesting in a negative way, but that's one of the things that came across my mind as well, Bobby. Anybody draw a fib out for any confirmation? I like that you're all looking at structure, different areas of structure, and this is going to give you the idea or the proof that, hey, all traders are different. This is why things work in zones, right? What's interesting here is that I think everyone in here was looking for the same thing, but looking at different parts of the same thing. Does that make sense? Everyone was looking at structure. But what do you notice? Bobby was looking a little bit lower. Prasant was looking a little bit higher. Lisa was looking a little bit in the middle, right? This is why there aren't, and I was a victim of this when I first started trading, where I believed in exact zones. Like, it has to hit the 618 exactly. Structure, if there was a structure swap and one wasn't exactly in line with the other, it was weird. But understand, we're all seeing the market differently. So this is why things work in zones, where there are these buffer zones around these important levels. So you may look at an even handle number, a psychological number like 69 flat, and you're like, well, how come price reversed at 68.98? What's that buffer zone? How come price spiked all the way up to 69.02? That's that buffer zone. We all valued a little bit differently, and that's an important concept to understand about trading. Now, I don't do this with patterns, but I think if you go back to can't believe I'm going to say his name, Scott Carney, right? I believe the way he teaches patterns are that it doesn't have to hit a Fibonacci level exactly. It has to be just around that level. I think Larry Pesavento may be the same way as well. That's a really good book for introduction on pattern trading. Larry Pesavento, Trade What You See. Really good book. That's a really good. I don't mention it enough. That's a really good book. That's probably the best beginner book for technical analysis. But yeah, Larry Pesavento, Trade What You See, a very, very underrated technical analysis book. I should promote it more. It's a very good beginner book for technical analysis. Again, not speaking to you guys because you guys are here on the platform, so you're getting trained on it. But that is probably one I should mention more. It's a good one. I think it's just because I've been so far removed. But it's okay to work in zones. So you can have a zone that says, hey, if we miss think about it like this, right? If we require a 50% retracement for a bat pattern and we miss the 50% retracement by 1 pip, we can't trade it as a bat. But how many of you guys have seen that and you're like, come on, it's still a bat, Akil, right? How many of you guys have done that? Maybe not traded it, but you're looking at it like, hey, come on, this is a straightforward bat. It didn't meet my rules, right? I have no problem with you trading in zones, but what should you do if you trade in zones? By the way, another great book, Trading in the Zone by Mark Douglas. Yeah, just have rules. You can have that's the thing about rules-based trading. It doesn't need to be. It needs to be strict, but it doesn't need to be strict for a specific thing. If Stuart wants to trade and if he wants to give a 5 pip buffer zone or a percentage zone is probably the better way to do it because it works within the time frame and whatnot and the ATR. But if Stuart wants to give a 5 pip zone for his Fibonacci levels, his rule just goes, hey, instead of B leg must hit 50%, B leg must reach Fibonacci zone. And then again, on the other side of the trading plan, Fibonacci zone is defined by, what do we say? 5 pips above and below the Fibonacci. And now it's rules based. Now you can do it. So these rules are flexible, guys. These rules aren't rules-based trading. I think why so many traders are afraid of them because they're like, Akil, if I have rules, it's going to limit opportunities. Like it's not. If you become a good trader, you're going to adapt your rules to what you want to do in the market. Rules are just going to keep the ship steady. Rules are like your moral code. Like, don't hurt people, don't steal from people, don't murder unless your own price is right and someone outbids you by a penny. Right? This is your moral code, right? Those are the guidelines that you're following, but you can adjust them in between. So yeah, I think it's interesting when you see all of us or most of you guys in here looking at the same thing, inside structure, but you're dealing different levels. Now, one thing I would draw on here too is a Fibonacci retrace. This is an interesting high to take it from, but let's take it from this swing right here, swing high to swing low, currently, and see if there's anything that lines up at that level too, right? Well, you got a 3D2 right near Bobby's mark, you got a 50% right near these inside wicks, right? So I think this is another one that gives you a good guideline. You have some confluence here. You have 50% lining up with this inside level of structure. Bobby's looking at kind of the zone. This is, if we go down to a lower time frame, he's reading the wicks here, and Orsi is doing it too, sorry. Where you see the wick down, and then the wick up, and then the move down. It's going to look like a small retracement if we go down to a 15. So he's saying, you know what, I want to be a little bit conservative and get out right here. So now that you got your targets, right? Now you just have to make sure the risk reward works. And of course, all you guys are regretting this right now because you're like, Akil said wait for conservative entry, and now we're just going up. Sorry. Sorry. You can't trade in hindsight. But you measure a risk reward. So if price action were to retrace and you get your double bottom here, measure out your risk. We know it's down here. Measure out your reward. You know, at minimum, it's probably up here. Does the risk reward make sense? Should. Again, we don't know where this is going to fill at, but you can kind of do your deal where you take your Fibonacci and draw it and see where that 50% level is. And I would say this, if you're able to, if your rules allow you to, I would adjust this stop a little bit, right? This stop is a little bit below structure. I'd move it down to about 53. I like those numbers, 3s and 7s, as far as my stop losses. That's another thing I don't think we've, good setup if it comes back. That's another thing I don't think we talked about before. This is something I learned really early on in a DVD, it had to be, where if we have, let's say, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60. You'll probably notice this about me. I don't often talk about it because I do it kind of like a creature of habit. But let's say this is your range of numbers. Does this make sense? See, I miss a day and you guys are getting knowledge bombs the next day. Look at that. I should blow my back out more often, right? Right? So I learned this this is the first, it was a DVD I bought on trading, I think. I think it was actually my first, this was probably, I think this was my first investment in trading. Like the first time I spent money on education. It was me and my best friend who I thought was gonna be my trading partner. And we bought this, like, it was a four piece DVD. This is how you know things are old, right? Because it wasn't like a downloadable course on the internet. It was actually a DVD, like the CD. We had to wait, like, this is before like 2-day shipping. We had to wait like 7 days for these CDs to come. OG knows what I'm talking about. He's like, CDs. He says, going back to it was a VCR, OG. a VHS, yeah. A VHS. Oh, then the ribbon broke and you had to get a new one anyway. But so I was taught about psychological numbers in the market. So we know which of these are psychological numbers. Do a little pop quiz here again. I'm in quiz mode, right? Numbers that end 0, right? 50, 60, right? So I don't want to put, oops, sorry, pushed the wrong button. I don't want to put stop losses right at those numbers. So I'm automatically eliminate 50 and 60, right? What's another psychological number in here? Think about numbers that are easy for you to understand as like a human being. 5s, right? 5s and 10s are very easy. So eliminate those, right? So I eliminate those numbers. I also don't want to be at the number directly before a psychological number or after, right? So that would take out 51. That would take out 59. That would take out 56. That would take out 54. And just me personally, I prefer odd numbers to even numbers. I don't know why that is. Probably because I'm odd. So if you ever notice, you'll probably pay attention now. If you ever notice my stop losses, right? They tend to be at usually 7s and 3s. I'm okay with 2s and 8s, but usually 7s and 3s. it's a weird thing. It's something that it's yeah. If I can, again, there's some situation where you can adjust, but if I can, you're gonna pay attention to it now, right? I typically always adjust to 7s and 3s. But that's something that I picked up very early on when I first learned about psychological levels, right? Where I tend to get stop losses in these levels. So again, in something like this where it's a 5, I just go 2 down, 4, 3. If it were a 50, 68.50, I'd go down to 47s. And again, 47s. 48s are fine too. I lean toward the odd numbers. There's probably a psychological element in that too. Odd numbers are a little bit harder than even numbers, but that's, these two levels. So there you go. Random. Does it actually make a difference? I don't know. I know you want to avoid 0s and 5s. Obviously, is a 3 better than a 2 and better than a 4? Who knows? But I thought it was an interesting fact. I don't really share too much because I kind of just do it without even thinking about it because it's been ingrained for so long. So anyway, that's New Zealand dollar. Man, 45 minutes of analysis on that. Any questions?